All right, got another YouTube live going. Welcome, traders. We're going to go over Bitcoin, and then later on today we will go over the different altcoins within the market. So what happened was my browser, Brave browser, unfortunately, usually does this like once a week, which is actually pretty good timing because on the weekends I do like to go over all the charts that I normally have within this monitor. For the people who are usually tuned in, they will understand that I have many alts that I look at every single day. So then the weekend is a good way to look and reflect back on the weekly and daily, the larger time frames. So then we have a good bias looking forward into the next week. So what we're going to do is do a analysis from the weekly, and then we'll also get into the tools that we use as well. But for first, first couple candles, we'll go over the monthly, redraw that trend line because everything got wiped. We got fresh, clean, naked charts here for all the time frames, so we'll go over it chart by chart. So the first thing we're going to do is get our curved support zone. You can put it at different anchor points. You could put it down here. You could put it at the candle body. You could put it at the bottom of this wick. I'm going to put it at the bottom of this wick, and then you just bring it up here. And then the point where you actually hold is going to come a little bit closer back in 2013. And you're going to want to, I think a better anchor point would be the bottom of that candle body, I think. Let's try and give that a go. Refine that. Refine a little bit more. And we are done. Perfect. So we have our support zone that we can see we've been holding for basically a decade now almost. And we do have a pretty well-defined range that we can easily see, which is going to be this zone right here. Key level of resistance that we need to pass. We just tested it for a level of resistance yet again, and then that's where we initially rejected and got the candle closures back in the summer of 2019. And then recently we did see the price hit that zone again. So initially what we did say was we were going to get a range bound area within this zone here, and I thought we were going to go a little bit higher. Just looking at where we bounced, I thought the wicks would protrude out kind of like we did here, but unfortunately they did not. We reversed a little early, but that's okay. Our bias is definitely now kind of in a sideways motion because we do have that ascending curved support. We can see right here, right here, right here, right here. It's going to be a key level of support that the price is going to hold above, and then we got a minor level of resistance horizontally. And now we're creating an ascending triangle. The price is going to bounce from horizontal resistance to ascending support. The price has to make a decision. The ascending curve support is a more respected long-term zone. So we're going to have a higher probability of moving to the upside. We can look back at the previous time frames and see that yes, we've had these similar structures before. You can even draw one right here. We're connecting the lower highs, the descending zone. Once we broke, we initially had a squeeze from the ascending zone and the descending zone, and this is the apex. We broke to the upside and made a strong move. That was the almost 300% move of the Q1, Q2 of 2019. And then we got a pretty solid consolidation correction back down to, yet again, the ascending support line. And then now we are holding below this zone here, and then probably getting it squeezed towards the apex, which is right around here, which looking at the date could be until summer of 2019. So we'll have to see the volatility and understand that we might not get a range-bound market until we get a break above around the 12K, 11.5K zone of a candle closure within the monthly chart. So we'll have to see on a little bit later, but for now, on the long-term view, that is my bias. I do think we will find buyers to pick the price back up than the higher low that we saw basically at the start of the year, around 65-ish hundred. So I think we will start to see higher lows come in again because we have been seeing lower lows for a while. But I think the higher lows will come in here. But the horizontal zone of around 11.5 to 12K or 11 to 11.5-ish K is our zone of resistance that we're currently holding above. And as long as we're making higher lows on the larger time frames, the overall bias and overall outlook and market structure that we have is looking pretty solid. So I will be really looking to enter a lot of significant long positions and buy some more BTC for the long side to start, I guess, almost changing my portfolio from USD to BTC and then grow my BTC portfolio instead of USD to around this level here. Because once we pass and break that zone, all we kind of have left is this resistance here, the candle closures, before we make a move to the upside. So we can see visually, this is the structural high that we need to break to form a higher high. We're probably going to form a higher low, but then we're going to test this high for a higher high, and then we're going to come back and hopefully retest the previous resistance as a new level of support. Previous resistance is around that 11K zone. Hopefully we're going to break above it and then retest it as a new level of support before blasting off and then kind of commencing the bull run that we had in the start of 2016 and then really pushing through in 2017. So, let's zoom back a little bit because something very similar has happened before. So let's look right here. You could also draw a very similar zone like so. And then this could be the squeeze like so. So this is an ascending triangle. This is a descending channel. So they are different price action patterns, but the continuation pattern is very similar. We got the price to make lower high, lower high, lower high, lower high. We saw the price, same thing. We're making lower highs. And then we saw a consolidation period where the buyers held a low and the sellers could not push the price below a certain low, like we saw right here. And then we saw decreasing sell volume coming in, like so. And then we got a low where there was a low consolidation, but there was more buyers, like so, than sellers, volume accumulation. Same thing as the bearish run in the end of 2018. We saw decreasing sell volume coming in, and then we saw increasing buy volume, creating our shift right at our zone of confluence where we saw the level of support from the curve zone as well as horizontal, creating a zone of confluence, and the confirmation would be at the break of the ascending zone, like so. And we also have one here as well. So we're connecting, it's not perfect, but on a actual line, you can see it's pretty well respected. So then now, after talking about holding the zone here, we're looking to the upside. In 2019, we got a much stronger move we did back in 2015. So then we needed more of a correction to kind of come back and let the market take a breath because that was too much hype and just too fast, too high, too quickly, basically is what I'm trying to say. But we got to pull back to our zone, sort of like we saw here. We're getting waves where we're making a higher high and a higher low and a higher high and a higher low, making a strong market structure move to the upside. And then we're seeing a very similar structure right here. This is a low, this is a higher low, this is a high, this is a higher high. So we're seeing a higher high, higher low structure, and we've now come back to form a lower or a higher low, because this is a low. We're looking probably to come back to form a higher low, sort of like here. This is a low, this is a higher low, and then we got a horizontal zone, and this is an ascending triangle pattern where you see higher lows coming up here, and then you see a horizontal zone, horizontal resistance turning into new level of support, and then we blast off breaking the previous resistance like we see here. Probably going to see something similar within the next few months where we're going to get probably a higher low to hold. We don't want to be, in my opinion, looking for huge extensions in movement like we can see back in 2019 or the drop in 2018 where you see longer extensions. But I think we're going to consolidate here, so we don't want to be looking for long extensions like we said. But once we do break out of this zone, out of this range right here, like we can see, when we break out of these ranges, we do have extensions where we can see some strong buy volume to the upside, push the price, carry it, and giving us a really good risk reward. So definitely something to keep in mind on the larger time frames. But we'll see where the time goes. Looking at this consolidation here, we can consolidate easily for 3 months here. So that is something to take note, because we are in an area where we are getting a squeeze from the ascending support in the horizontal zone of resistance, where we could see a consolidation, because we saw a squeeze right here, where this is yet again a zone. Let's get our arrow and then zoom right in. So we are getting a level of buyers here, keeping the price up, because we saw the buyers hold, and once it hit that ascending support, it pushed the price above the previous high, making a market structure move, making a higher high, and then it held the higher low, previous resistance, previous support, held the higher low, so then that indicates that the buyers are present. Also, we see more buy volume come in than sell volume, showing volume accumulation, and then we see a higher low hold again. So at this point, we've consolidated for 3 months here, where we see a low and then a high and then a higher low, and then the next consolidation still. So we're seeing 4 months here of just consolidation, and then we finally see the monthly break above the resistance zone, and then next month we see a surge in buy volume, taking it up to the next resistance area, like we can see in the previous price action here. And then we get another 2 months of consolidation, and then we get a slight hold of the previous level of resistance and the new level of support. We see a wick from the previous candle indicating there's buy pressure within the market, and then we get a couple months go past where you're testing those highs, and then the third month finally really shoots up, showing that bullish volume, closing at the very highs there, and then we consolidate near the all-time highs, and then we blast off. So it takes time, right? It's not like we're going to get to 20K instantly. You see months where you're slowly consolidating down. So, understanding the monthly, understanding that this growth takes time, and you're going to have many months, 3-4 months of consolidation, and you got to be prepared for that. You got to have a different game plan when you're trading within months of consolidation. When you are day trading, use the 5-minute or some short-term time frame. It matters a little bit less, but swing trading for sure, you really have to understand where you are. And I think every trader definitely goes through the process of using a certain time frame, and then understanding that you really got to break down multiple time frames to get a good understanding of how to set up risk rewards, and it's a lifelong process for sure. So that's basically the breakdown of the monthly. Not really going to break it down too much more. We'll obviously get into more granular details when we get into the weekly and daily, but not going to put too much more detail on the monthly. Want to keep it very simple, very clean. Not even going to put a potential horizontal zone that we could see here, because we know that we're looking to make a higher low. So then we create the ascending triangle formation, where we're making higher lows, holding a horizontal resistance. And once we see that monthly break above the zone, we're likely going to see some bullish pressure to push the price up to the previous level of resistance right here, or beyond. We don't exactly know, but we have a plan and we have a bias, and that's the main thing. So now going to the weekly chart, this is going to be on Coinbase. And what I will do is just draw a trend line here to connect the higher lows. Probably not going to put that anchor point right there. I might put it this guy right there. Sort of like that. Just making sure it looks fine, I think. It's a bit of a zone. Not perfect, but I'm happy with that area. Alright, so we got our ascending level of support, like we talked about in the curved area. This is a straight line, but we're representing a certain area of higher lows, and I think this is what it's going to hold. So then understanding the macro monthly outlook of the support, the first place I'm looking at for an area of confluence for the next level of support is what we saw right here, $78-ish $100 area. We see it as a strong level of both resistance and support in the previous time frames back in 2019, and then also in 2017, we saw it as a key level of resistance right here, of around 7.5K, and then we see it used as a support, and then it was used as a support again. But the main, I think, area of confluence for the next level of support is what we saw right here, $78-ish $100 area. We see it as a strong level of both resistance and support in the previous time frames back in 2019, and then also in 2018, or 2017, we saw it as a key level of resistance right here, of around 7.5K, and then it was used as a support again. But reason I'm looking at this zone of confluence is because of 2019. It respected it so well. Support, and then resistance, and then it's probably potentially going to be a new level of support where we have an area of confluence now, because it's not only an ascending zone from the curved area, but then also a horizontal zone. So it's definitely a big drop, but it wouldn't surprise me too much, because then we'll be coming to around looking at this zone here, which would definitely be a higher low than what we saw hitting around 6,400. So I personally think it's not a far stretch from where we currently are. So that's my personal opinion. So in that in mind, there's going to be a lot of volatility to the downside there. It's not going to be a straight line. So we're going to have to break down the smaller time frames. But that is a little bit of my outlook on the larger time frames. And then, like always, we could draw in the trend lines here, but I don't think we're going to. I am going to do it on the weekly though. So we're going to put 2 trend lines. One we're going to put right here where we did get a fake out. So that's going to be the first. And why I have an anchor point right there. And then I have a type, let's get our arrow. I have a type A, so just the wick rejected right off the zone. We have a couple type C's there with just the wick, but then there's no real validation. We do get the second validation with a type B candle closure, where you get just the candle body to close right at that zone, and then once you're able to put a projection on it, you're able to encompass this wick as well as this wick, giving you a bit of a zone that we're working with. So I wanted to first talk about why we put that zone there in the first place, and then go over not just the actual line, but the projection as well. So that's that projection right there. So now we got our outline of the price action, and what we're also going to do is just put another trend line at the very edge where just the wick has touched there, and that's the last point of potential contact for this descending zone before we're just looking at horizontal zones of resistance. And then after the 20K, we won't really have any zones to work. So then we'll have to use fibs in order to find potential zones or ascending zones that are going to be used as well. So looking at the weekly here, got a fake out. As we can see, we were looking long, but unfortunately it could not hold after this bearish candle right here closed. We were hoping to see this gain more buy volume, but unfortunately this gained significant amount of sell pressure, so then we got a dump to the downside. And then, like we were talking about before, I think it wouldn't be far off to connect at the 78-ish level again. I wouldn't be surprised if we did try to retest those lows. So I will go like that, make it a little bit more precise on the weekly. So 78 is definitely not out of the question in my opinion. We do have a level that we're currently testing as a support right now, right here. So we'll see how the price reacts to these zones. Makes sense that we are going to get some level of consolidation because of the significant drop that we had. We are seeing now volume distribution where definitely we are seeing more sell volume than buy volume, especially with that candle right there. But surprisingly, we're not seeing that much sell volume on the way down of this massive bearish candle. You see in the previous charts, if you look at, for example, this bearish candle or this bearish candle, or even this rejection, you see that it's significantly larger than what we're seeing right here. And we're not seeing a huge increase in buy volume. It would be nice to see once we start falling back into this range here, we start seeing a decrease in the supply or the sell pressure, where we're seeing less sellers come into the market, and then you see an increase in buy pressure. Kind of like you did see some sell pressure right here actually. We saw a tremendous amount of buy pressure shifting the market supply from more sell side to now you see increasing buy pressure, especially with this candle right here. And then you see an increase in buy pressure with that massive rejection. So sellers are definitely still present in the area, but a couple strong candles to the upside after we hit the potential confluence zone of 78-ish $100 would be a good opportunity for us to be looking for longs. But right now, we are at a mid-range zone here within the weekly. But the sentiment, the momentum, the supply is higher than the demand. There's a lot of indications, in my opinion, giving us reason to look to the downside. The very strong bearish candle. But we will see. We'll dive into the smaller time frames here. But this descending triangle zone, this descending zone we'll talk about on the daily of this descending triangle, is going to be the area to break, like we saw with this descending zone. Once we broke it, we called that one pretty well. It was a strong move to the upside right after breaking this zone, basically right at the start of 2020, and that was a really good call. And then we're going to see that pullback, and on the smaller time frames on the daily, we'll discuss a very similar setup that we're going to be looking to take once the price does consolidate, find a level of support, and then start to look to the upside. Hopefully it tests our descending zone maybe one more time, making it a valid, dependable area that we can use. But overall, that's the outlook on the weekly. We can make this area green because, in my opinion, this is going to be the area of demand where buyers are going to be located because of the confluence area. Currently in a mid-range zone. Yeah, we could bounce a little bit and hold this level of support, but we'll see what the smaller time frame setups are able to provide at this zone, because we know that it's an area of sensitivity on the weekly chart. But for a bias long term, it's a little bit hard on that one, because if we do bounce up, we could get a squeeze back and then dump down, retest these zones, and then come back up and rally and then test the zone again. So at this point in time, I don't really want to make too much of a bias because we're in a mid-range zone. But if we do dump below here, we're definitely going to look to long. And if we come back up here, we'll look at the volume. If the rally back up is very weak, it could just be a retest to the previous descending triangle, and then we could be dumping back down, which would be a really good trade. So looking at the volume on the monthly and the weekly, and on the daily as well, you can kind of capture the larger macro supply and demand shifts that are occurring, looking at volume accumulation or volume distribution, looking at no supply and no demand candles, which we talk about in the Performante Premium video education series. So now going to the different daily charts that we're going to be looking at. First, we're going to be looking at the CME Futures Exchange, which is a Chicago Mercantile Exchange, which is CME, and it's going to be this candle or this candlestick chart right here. Now, the main reason we're looking at this one is just because of the wicks and the amount of gaps that we have in the market. Give me one moment. Just give me one moment here. Okay. Yeah, okay. Just someone telling me I got to go in 10 minutes here. So I'll just wrap this up here a little bit quicker. Don't exactly even know where I'm going. Yeah, anyways. So the reason why we're looking at this is because we have gaps in the market. Right now we don't have a lot of gaps. We do see a gap here in the market, like we can see right here. We do have technically a wick almost filling it, but that is an area within the chart that we do need to fill, like we saw here. But they don't need to fill instantly. So like we saw back here, there was a gap in the market that didn't fill for many, many months, basically 2 quarters until we, or I guess, I don't know how many months that is, 5 months. So, you know, that doesn't need to fill right away. But the main takeaway, I think, is going to be the weekly chart to give us our long-term bias. And then this is mainly just for gaps. And then the daily chart that I like to use more or less to do my one-day analysis is the Gemini Exchange, which is this guy right here. And then we can go back to the weekly, go on the log chart, and then draw our descending zone to give us the area that we currently are holding below. And once that is in place, we just put a nice horizontal zone that we currently are using as a nice demand area, like so. And then that's about it for the analysis. We can put another zone just above there. So we have an area that we're working with. And then we have the mid-range zone there. So then now looking at the daily, you can see there was a descending zone there. And this is the trend line I was talking about, like so. So this is the zone that we're going to be looking to potentially come back and retest. And then we also have a horizontal level of resistance as a potential. So if we do come back and test these zones here, I think that'd be a really good opportunity for a short, as long as we don't see a tremendous amount of buy volume. If we see a little bit lacking amount of buy volume, then we could be looking for a good opportunity to blast through. But I will be mainly looking for shorts if the price does come back up here, because we have the larger descending trend line here. You have the minor descending trend line connecting the lower highs from the descending triangle here, and then you have the horizontal level of resistance giving a lot of confluence for the sellers here. And then if we do see a lack of buyers when the price does pump up to this zone, and we see the sellers still hold the price below the area, giving us confirmations that there's sellers in the area with bearish engulfing candles, a double top with a break in the support, some pins to the upside, closing bearish. Those are the types of things that we're looking for a potential entry that we're looking for. So we did draw one more trend line that connected the low right here. It's unconfirmed, but that is the trend line that we drew initially, because we only have 2 touch points, and then this would be a potential third. So I will leave this here because it has been respecting this area quite well. But and we also do see that this is a potential area where buyers could be located, because it was a previous market structure resistance. We can see right here. I'm not really going to leave that there, but potential level of confluence because of the ascending zone, because of this horizontal zone. So we'll see. Actually, what I might do is just leave it there. It is a pretty significant level on the chart. If you do look back at the fall of 2019, you can see support, resistance, resistance not perfect, but support, resistance, and then now it's going to be a support with a level of confluence. So we'll see if the buyers are able to hold the price up there, maybe get a bullish push up on the smaller time frames. We would want to see a confirmation, and then if we are able to get a move to the upside, obviously that's a move worth capturing. It's like 8%. So then if we're looking at alts as well, we could see a strong move there. So that's the overall outlook for the 1-day chart. Looking at the 4-hour on the Heiken Ashi, let's just draw the outline here, and then what we're going to be doing is putting a zone like so, and then also putting a horizontal zone like so. So then we have an area of confluence where if we do see a surge in buy volume come in, that is probably going to be an area where there's going to be sellers in the market. And we also are just going to put some horizontal zones that are going to be valid areas within the chart like so. That's basically what we're going to do. And then on the smaller time frames, we see descending zone and a horizontal level of support that we are holding on Bybit. We see that there's strong volume distribution within the recent price action, which is pretty bearish. That's about it for the 4-hour chart here. We see some horizontal zones, and then we see a descending zone. And then the 4-hour chart for Bitfinex, very similar thing. You know, just going to put these same zones that we're holding right here, and then we have a strong level of resistance right here, and we have a mid-range zone that we need to look at around here. And then we're looking for a potential move back to the upside. We got a resistance zone right here, but then this area is going to be the potential retest zone potentially, but then we do have a retest zone of a mid-range zone right here. So we'll take into that account, but this is the main level of supply that we could be connecting. And then on the 1 hour, we'll discuss this descending zone that is squeezing the price closer together. So we know that there's a level of sell pressure here, and we'll just discuss 2 trend lines that we see, and then we'll cut it off. So we see initially this trend line like so. And also, if you go on the 15-minute chart, you see it's 1, 2, 3, 4. So it's a dependable trend line because there's 4 zones that the price is respecting. And then we also have another one right here where it's, I'd say 3, but you can also classify as potentially 4. So it's also a dependable zone. So you'd want to see the price really break out of this area. Also, this is the market structure high that we need to pass anyways. So we would need to see the price break all those zones before we even think about looking to enter a potential long position, because we have resistance there. But this is our current level of support that we're holding right there. So that is what we need to pass. And that is, so around the 88, I would say we need to pass and hold. And then we're looking for a higher low if we are able to hold above the $8,800 level. So that's my analysis for BTC. I will go over the tools later because I have to go and take care of some business. But hope you enjoyed the analysis. If you got any questions, drop them in the Discord, and I'll be happy to answer those in the Discord. So until next time, have a good one. I'll go over the BTC longs and the other tools that we have within the crypto market update when I come back shortly. So thank you very much for watching. And if you got any questions, definitely drop them in the comments. Like we said, we need a market structure high to look to long. We need to see a market structure lower low in order for us to short. So right now we're in a consolidation, getting squeezed closer to the apex of the pattern, which is around here. We got two descending zones and a horizontal level of support. We see more volume distribution on the 1 hour chart for Binance, and we don't see much buy volume coming into the market. We see quite a bit of no demand candles where there should be higher levels of demand. But overall, we're just being patient on the 1 hour time frame. We don't want to enter until we see confirmation that BTC is going to break either to the upside or to the downside, and then we'll look to take action in whichever way BTC breaks. So that's the overall outlook. We'll see what happens this weekend. We'll do another BTC market analysis tomorrow like always, but until next time, happy trading everyone.